I cannot believe how quickly April has gone, so let's spend the next few minutes talking through what's been going on within my portfolio on Trading 212. We will first of all have a quick look and see what's been going on within the markets, because it's been quite a bumpy ride. As we can see from this chart on the FTSE 100, it is up 2.35%, but if we have a look over the last couple of weeks, it's been on a little bit of a rally, and that rally has actually taken it to yet another all-time high. And this is all against the backdrop of what has been going on within the US, with inflation figures coming in a little bit higher than anybody had expected, which has actually led to the S&P 500 being down almost 3% over the last month. If we narrow in over the last week, it has seen a bit of a bump up, being up 2.19, so it would have been even worse had we not seen that little bit of a rally towards the tail end of last week. We are into yet another earnings calls period, and it only feels like we've only just finished the previous one, but I think the big one coming through was probably the Google, with them jumping 12%. If we have a quick look at the heat map for the S&P 500 almost at the end of April, we are looking at big things like Nvidia, Google, Amazon and Microsoft all showing profits, but some sectors not doing quite so well. So we looked down at the utility side of things, that wasn't doing particularly well, and financials also taking a little bit of a hit. If we have a look at the FTSE 100 heat map, a bit of a mix, and this is just showing you what it's been looking like over the last year, with an awful lot of red still on there, with companies like Burberry's down over 50%. Let's jump across and have a quick look at the portfolio in Trading 212. I'm using Trading 212 as my main platform for this year. I will also use InvestEngine, but we'll look in here, and if you haven't already opened a Trading 212 account, there is a link down below where you will get a free share for investing anything from £1 onto the platform. Just under 37,400 in the whole portfolio. There are some reserved orders sat on the side there, as well as a little bit of free cash, and already using up 6% of the ISA utilization. So we will do a quick whistle stop through, look investments within the portfolio, looking at being up about 7%, and that actually saying that most of my investments are into the UK, and it's running at about 3% up over the last year. I'm reasonably happy with pulling in 7%. This just keeps seeming to get larger and larger. If we have a look in here at some of the pies that I have built, I am building a European dividends pie, which I will share in the near future. I do have a growth pie in here, pulling in some of those dividend stocks that will also give me growth, because as you will see, some of the monthly dividend stocks that I hold that sit within the FTSE 100 are relatively stagnant. Let's jump in and have a quick look at some of the stocks that I have in here. So Anglo American, as you can see, absolutely jumped a couple of weeks ago, and that was because of the offer from BHP, the Australian miner, to basically buy out Anglo American. So that saw a big jump of about 10-11% on the day. We will see what happens. They have a few weeks to make a decision on whether or not they go through with that. Some of the key facts on Anglo American, and 30 shares in there, it is up 26%, and it has seen a massive cut in its dividend yield, coming down from sort of 7-8% down to that 3.41, but it is a cyclical type of company, as you'll see with some of the other miners that I hold within my portfolio. I hope you're getting some value out of this video. Are there any of these stocks that you already hold, or any that you are thinking of getting rid of? Love it if you could drop a comment down below. Think of liking the video and subscribing. ASML is a recent purchase that I've made, basically just buying into part of that whole AI and semiconductor side of things. If you have got yourself a Spotify Premium, why don't you go and have a read of Chip Wars, something that I'm reading or listening to at the moment as an audiobook, and sort of gives you the history of semiconductors. So SML is one of those sort of dividend growthy type of stocks that I'm looking at. Pays a small dividend of 0.71%, but I'm hoping over the long term it will continue to be one of those market leaders, and I'm hoping to see future growth in this company. One of the things that I've been doing is using Stockopedia as one of my major research tools, and as you can see on this screenshot, you can see that it is very much a large cap adventurous type of stock, and as Stockopedia would grade it, a high flyer. I managed to buy it as it dipped down recently. British American Tobacco not doing particularly well at the moment. I'm holding 60 shares of that and I'm down about 7%. It is currently paying me a 10% dividend yield, so I will continue to hold it, but as you will see with one of my other stocks that I hold, high dividends do come with a risk of the company actually reducing that. DS Smith had a bit of a drop over the last month. It's down about 14%, but overall, for the 50 shares that I'm holding of it, it is still up 23% and currently paying a 5.29% dividend yield. Evolution Gaming is a stock that I have bought into, and I'm seeing this as being very much of a growth play, and I've bought in 3.25 shares of this a few weeks ago. And if you don't know who Evolution Gaming are, an online casino provider, and they have got a really strong moat on this type of entertainment, and they basically provide the service for a number of the companies worldwide that do online gaming. So hoping that there is going to be a bit of an upsurge, looking at a dividend yield of 2.37% and looking for a bit of growth in the stock price over the next few years. Glencore up about 10% over the last month, and all in all that has saved me and brought me back into the green with the Glencore 110 shares that I hold, up about 5.14%, and it is paying me a even smaller dividend yield than Anglo American were paying me, coming in at that 2.19. These are very cyclical. It will all depend on what the supply and demand requirements are for the different materials that they mine. UKW up about 1% over the last month, currently just sat at a 2% gain. But one of the main reasons that I'm investing in the UK wind is looking out to the future. There's going to be a requirement more for those renewable energy sources to keep lighting and running all of these electrical equipments that we are looking at having, and it pays me a 7.36% yield, and recently has just announced its 2.5 pence per share dividend, and that's looking at matching last year's 10 pence over the whole year. So looking forward to that one landing. A nice little £25 payment coming in when the dividend lands. GSK down about 3% over the month, but all in all, for the 40 shares that I hold, it is up almost 23%. I'm paying steady little dividend yield of 3.54%. IG Group, very choppy over the last month, still being up about 1%, just being drawn up by all the growth that there has been over the last few weeks within the markets. Looking at about a 13% growth for the 86 shares that I hold there, and paying a reasonable 6.17% dividend. ICP was way up earlier on in the month. It has just sort of settled itself and done a little bit of a rebalance, but all in all, the 20 shares of ICG that I hold is up almost 60%, and that IUKD, this is one that I am seriously considering selling out of at the moment. While it was up 1.75 over the month and I'm up almost 10% on this, I do feel that there are issues with IUKD and the returns that it provides over time. I think as I've looked at it, it gives you about a 3% compound annual growth rate, and that just isn't cutting the mustard, even when you add in a dividend yield of 6.28%. Looking at some of those top holdings within IUKD, as you've seen, some of them are falling quite heavily and won't show any particular growth over the next few years. What I may do with IUKD is sell out of it and look at changing into, say, a Wisdom Tree quality ETF, and that is something that I'm starting to get a lot more interested in, based on some of the learnings that I've picked up through Stockopedia, looking at the importance of the quality, value, momentum side, and how that all comes together to drive growth over time. Watch this space. I'm going to be doing a video on that very shortly, and potentially showing me going through that transition from IUKD to a Wisdom Tree quality ETF. We have Legal & General down 8.4 over the last month, and I do have 850 shares in there. I think it's actually gone ex-dividend, and it had a massive effect on its stock price, dropping it almost 6%. So I'm looking forward to quite a nice little dividend payment coming in from Legal & General in the near future. Overall, I am up 5.3% on that, and it is paying an 8.86% dividend yield. Lloyd's, reasonably stable over the last month. Have we peaked out at that 52.3 pence per share? I'm holding 1,100 shares of that, and that's up about 22% at the moment, and it comes in with a nice little steady 5.39% dividend yield. National Grid just been trundling along, down about 1.25 over the month, 60 shares held in there, and just over 8% growth in that stock over the time that I've held it, and it's paying a 5.44% dividend yield. Looking at sector weightings versus market, as shown in this Stockopedia allocation breakdown for my Trading 212 pie, I am particularly over on financials, but the REITs tend to throw that off a little bit, as well as some of the financial companies that I'm invested into, but definitely need to start looking at getting a little bit more into consumer defensives and some of those consumer cyclicals as well. Pfizer is down, and I do actually have another buy order in here to sort of get my hands on a few more shares off it. Currently got just over 20 shares, looking at being total return almost down 3%, but as I said, got a pending order in there, and it is paying a nice little 6.61% yield. PHP, is it time to buy in a little bit more? It is down 3% over the last month, and for the 1,700 shares that I hold, I am at almost a break even, so it's sort of my purchase point to get back in and buy a little bit more of this, as it sits at 91.85 pence per share. Looking at dividend yield of 6.67%. Right, my largest holding, I actually triggered a couple more purchases of Realty Income over the last month. It's about break even over the last month. It did dip right down to the $51 mark, which is where I bought in a little bit more. Now holding 170 shares of this, and currently up about 1.34%. At this current value, Realty Income paying about 5.75%. Because of the size of this gives a much higher allocation in my whole portfolio towards the financial side of things. What I might do is look at potentially taking out some of the exposure to Realty Income and look at something like Agree Realty or Vici. Rightmove, this is another purchase that I've come into recently, and if we think about it, if you're going to buy a house in the UK, where do you go and have a look? You go and you look at Rightmove. It really does have quite a strong moat. It is the leading provider in that market. Next behind that, who is it? Zoopla? Yeah, who even really goes and looks at Zoopla, I would always be looking at Rightmove. It really does just run itself. It's got really good financials, and it also pays a dividend of 1.81%. So I'm just looking at starting to build this position up slightly over time. Rio Tinto, another miner that's been on the move this month, and we're up nearly 10% on that, holding 16.25 shares and up overall 12%, most of that gained in that last month. And it hasn't cut its dividend as much. It is still paying a 6.35% dividend. Rolls-Royce, more good news for expansion into space exploration. It is sat at over the £4 mark at the moment, and for the 100 shares that I own, I am up about 90% in this portfolio. It isn't paying a dividend yet, and I don't really care about that. I'm just happy enough to continue to take the growth that Rolls-Royce is providing at the moment. Taylor Wimpey, down just over 4% over the last month, but overall up 25% for the 500 shares that I'm holding there, and still holding a reasonably good dividend yield of 7.12%. As you can see on the screen, a whole batch of ETFs all up, and anything from that 6.55% up for the emerging markets right through to the FTSE 100, almost up 13%. And then my final stock that I hold in Trading 212 is Vodafone. It has announced that it is going to cut that dividend yield basically in 50%, and that I think is going to be next month that comes down. What further effect will that have on the stock price? It is, from the time that I've purchased the 400 shares, it is down 11%, really feeling it is time to get out of Vodafone. And that is what I say, when you have really high dividend yields, you end up with that problem that they aren't guaranteed and they can be cut at any stage. And potentially for Vodafone, that is the best thing for them to do: cut the amount they're paying out to shareholders and focus that money to bring it back into profitability if it can. I think there are a couple of new stocks in there that I'm going to continue to keep building on, but why don't you go and have a look at this latest video that I've done that just talks about, could you turn your life around by small little savings into the stock market that see you then grow generational wealth. Thanks very much for watching, and I will see you in the next one. Cheers, bye.